Hello everyone, hope you're doing well. 1st July, it's Doctor's Day and Chartered Accountant Day, meaning health is wealth. Also, today is the first day of the second half of the year. So today, let's look at what happened in the various asset classes in the last 6 months, and more importantly, what is the outlook for the next 6 months and beyond. To begin with, what happened in the first half of the calendar year? Well, different asset classes performed very differently. Oil, as you will see in the green, up 51% in the first half of the year. US dollar against the rupee has been 6%, and pretty much everything else has been negative, starting from gold with 1%, Chinese equity 5%, Indian equity 9%, silver down. Global equity markets on an average, MSCI World is down 20%, NASDAQ 30%, and well, Bitcoin takes the cake, 59-60% down in the first half of the year. So reasons for this fall, plenty of reasons, but some of the important ones are globally interest rates are rising. Inflation due to rising oil and other commodities is a big worry for a lot of people. Ongoing Russia-Ukraine issues, again, contributing to the inflation. And end of easy liquidity, especially in US and European markets, creating a risk-off sentiment globally. And now there is of late a lot of talks about a recession coming up in the US markets. So now let's look at what do we expect for the next few months and possibly even in longer term. Starting off with the equity markets, we can expect a lot of volatility in the next few months because there's going to be a lot of news flow, both on the positive and mostly on the negative side. But what will be the most important thing is that fall is not likely to happen at the same pace what we've seen in the first half, but it could be a long drawn event. Oil and Russia are a big factor which will determine the market movement. And on the US Fed, because we've been speaking about US recession, interest rates, US Fed very likely that right now they're in a very aggressive hiking mood, but possibly in the next 2-3 months as recession call grows and the consumer sentiment is going to be hit in the US markets, you will see the US Fed slowly, you can say, coming back to a more accommodative stance. Mortgage interest rates in the US are at 6%, which is like the highest in the last 13-14 years. Compare this, in India, we are at 7.5%. We are at close to record lows, whereas in the US, it is like at a 13-14-year high. I don't think this will sustain. The US Fed will, you can say, cool down the markets going forward. We should be staying calm and look to accumulate on every dip. That's the strategy for the equity markets. Next, in terms of fixed income and bonds, markets are already pricing in quite a bit of the hikes that are there, be it the US markets, be it the Indian markets. Very likely that the bond yields will stabilize at current levels and possibly move down as well. Only exception, or the only, you can say, worrying factor could be if oil prices start going up beyond the 150, 175 range, which could warrant a change in stance as such. We will come back to you in case something like that happens. It is a good time to add both at the short term and the medium term debt funds. Target maturity funds will give good visibility going forward. Next, let's look at commodities and the outlook for commodities. Gold and silver, the precious metals basket, looks likely that they will move up to 3%, come down to 3%, more of range-bound movement because there is not enough of trading interest in these commodities for now. Oil, no way to predict because of the Russia-Ukraine issues, so it could surprise us both either ways, either up on the upside or the downside. If the war ends, we will see a cool off of $15-20. If the war continues and escalations are there, we may get, you can say, a bit of shocks as well. Industrial commodities like copper, aluminium, nickel, looks like they may have peaked out for the short term. So likely that we will see a little bit of correction going forward over there. Now coming to cryptos, well, this is the most unpredictable of all asset classes. Bitcoin is down from $69,000 to about $19,000 as we speak in the last 7 months. That's close to about 60% of a drop. And still, because it's such a speculative asset class, we still cannot say that whether this is the bottom or can we see 4 digits going forward. It's more like the speculative index. It's right now being viewed globally as a barometer of what the market sentiment is. The fall in Bitcoin indicates that a lot of new investors are panicking. So outlook from here on, very difficult to predict, but the way things are going looks like more casualties and more defaults in terms of exchanges. Possibly hedge funds in this space can happen. Some have started, but more can be expected. What this panic may also do is we may get an indication in terms of bottoms in the stock market as well. Now let's look at what should we be doing. And there are so many things that we spoke about. There are some which we cannot control, and there's some which we can control. So let's look at what we should be focusing on. Market movement, you and I cannot never control, but what we can control is our asset allocation. So let's focus on that. Oil and commodity prices, no way we can do anything about it, but we can look at our family expenses to manage that better. Rising interest rates, well, the only solution for that is to control and repay debt, avoid taking any kind of loans as such. That would be the ideal situation. What to put in and didn't do, we have no control on that, but what we do with our investments and our emotions, that is something which we have control on and which we should have control on. US recession, again, we'll just be standby watchers. So, but what we can control on is our savings. So let's focus on what we can control rather than looking at only what the media has to throw up. Market cycle, we periodically bring this up. So where are we currently in this market cycle? According to us, we are between fear and panic currently. Earlier in our February statement, it was between denial and fear. Now we've moved progressively down. We are somewhere between fear and panic. What, according to us, there is more to go. The capitulation phase is still to come. So we'll have to be watchful and plan our portfolios according to that. So what do we recommend from here on? Short-term investors, we always keep saying any money which is there for 2 years, even 3 years should not be in equity. So let's not be greedy, stay away from the equity markets and look only at bond funds. For long-term investors, look at your asset allocation, and over the next 6 to 9 months, it would be a great time to be increasing equity allocation meaningfully. Investment strategy, as you would see, I've striked out the word no, because earlier we were like no lump sum. Now, given the recent fall, we can start looking at doing small lump sums and add further through SIP and STP investments. Traders, be watchful, be very careful, because this market is going to surprise us in both the directions over the next few months. There will be very sharp pullback rallies which can catch us off guard as well. Let's end with Warren Buffett. Be fearful when others are greedy and be greedy when others are fearful. It sounds simple, but trust me, I've been in the markets now for more than 20 years. It's definitely not easy. So let's stay disciplined. Let's stay focused on our goals. And hope you like this short video of us. Do click a like button and a share button. Share it with friends and family. Thank you.